It's Brian Preston, the money guy.
Man, maxing out retirement plans and tax advantage savings plans.
I've heard you say this, Brian. I mean, forever since we've been hanging out, that the number one best, absolute, most important, awesomest, coolest, other adjectives to describe it, way to legally hide money from the government is through a retirement plan.
For sure. I mean, if you're not taking advantage of, because look, the government has an incentive. They know Social Security's got some issues. Mm-hmm. The younger you are, the more in jeopardy your Social Security contributions are for you to actually not receive a benefit in the future. Because this thing is not really, it's not funded at all. Let's face it. It's being written out of the general budget every year. At some point, they're taking whatever is collected from the current workers. They have to make up the difference with general funds from the government because they never saved the money while this thing ran at a surplus for decades. So, oops, the government screwed this up. You are going to be the unfortunate person that has to pick up the pieces and figure this out. So to kind of spark your interest economically into saving for the future, and their oops, they have given you a huge incentive with tax policy and the fact that they want you saving for the future. This is one of those things where they want you, they give your employer incentive, they give you an incentive, and it's not just retirement. They also do this on your medical expenses too. So let's kind of jump into these, Bo, and talk about what are ways that you can cut your income taxes by saving for the future.
Yeah, so you got to think about all the different options and types of vehicles available to you. There are IRAs. You know, there are traditional IRAs where you can get a tax benefit, or Roth IRAs where you can get a future tax benefit. There are self-employed options like SEP IRAs, potentially simple IRAs if you only have a few employees, solo 401ks if you have no employees, and then if you actually have business with employees, there are 401ks and profit-sharing plans and cash balance plans. And what we've found is there's normally an evolution that folks work through. They kind of start with IRAs early on in their journey. And then maybe you're a business owner and you want to go save a little bit more. You might move to a SEP IRA, and then you have some employees and you might do a simple IRA. And then you have more employees or you want to save even more and you move to a 401k, and then you become really, really profitable and you're looking for ways to cut down your tax bill because you are in those highest tax brackets and you're trying to figure out how can I keep more of these dollars in my armies instead of going to Uncle Sam. There are advanced strategies like cash balance plans where you can do that.
Yeah, those, Bo mentions cash balance plans. We like these plans, but they are complex.
They are complex.
I just want you to know, there's a matter of fact, we have a client, we were talking to them. I mean, I love the tax savings. I love the ability to plan for my future and for my employees. But man, these things have a lot of variables. Because remember, they look more, instead of being a defined contribution plan, where basically the government helps you define how much you need to save each year and match through, matching money as well as profit sharing. The defined benefit is going to be impacted by your age, what
all
the goals are,
assumptions.
when you can have access to the money. There's a lot of assumptions there, so this does get complex very quickly. And here's the other thing, just to tell you guys. If you're thinking about, it doesn't have to just be retirement. Remember, health savings accounts.
Sure.
This is something, because they want to, that's a benefit for you to save for that. That's triple tax advantage because you get the deduction on the front end, you get tax deferred growth, and if you use the money for qualified medical expenses, it is actually tax-free. Don't overlook those flexible spending accounts if you have an employer plan that allows that. Now, you will not typically, there are some exceptions. I'm not going to cover them on today's show. You don't typically see HSAs and FSAs working together because there's some legislation about that. But I wanted to kind of tell you, here's the part I think you need to make sure. You don't want to screw up on some of these. The salary deferrals, like on your employer plans, and those type of contributions have to be in by 12/31.
That's what I was going to say. Whenever it comes to retirement contributions, there's essentially two parties that usually can put money into your accounts. There is you as the employee, and then your employer, even if you are your own employer. Well, all of the employee money, salary deferrals in a solo 401k or a regular 401k or a simple IRA, those all have to happen before the end of the calendar year, before 12/31. If you are on the employer side, though, you get a little bit of breathing room. If you're making SEP contributions or profit-sharing contributions or matching contributions or cash balance contributions, you do actually have until the tax filing deadline next year. So understand, if I'm a business owner thinking, oh, you know what? I'm going to max out. I'm going to do the full 57,000, but I know I've got till April. That may not be true. You have until December 31 to do your salary deferral piece. If you're doing it in the 401k, you can do the remainder up until April. Make sure you understand the difference.
So yeah, just don't. It's like everything else we usually give advice on. A little bit of preparation goes a long way.
Yep.
Just don't assume when you get to filing your taxes and you give your CPA all the information that they're going to have all these magic bullets to lower your income taxes. Preparation is going to be your friend. Be proactive on this. So, because you need offense to score. You don't do it through defense.
Absolutely.
And if you're waiting until you're filing your taxes in April and you're asking your accountant, hey, how can I lower my taxes a lot? Yes, there's some tools. I mean, we can SEP IRAs and other things will go back in time. But typically you're playing defense at that point. We want you to be in a much more offensive stance by doing preparation.